Hello, I'm Rachel and you're watching 𝐾𝐿 TV live from Sydney, and this is the Stocks in Action show. We'll be taking a look at recent updates from ASX listed companies with a quick glance at developments across the equity and commodity markets. Firstly, shares of the Commonwealth Bank of Australia hit a record high of $109.03 this morning. The multinational bank reported that its net profit after tax statutory is up 19.7%, while its cash net profit after tax is 19.8% higher due to better economic conditions and outlook, resulting in a lower loan impairment expense and a strong contribution from volume growth in all core markets. CBA's operating income is also up 1.7% with strong volume growth. The bank had a net interest margin of 2.03%. That was down 4 basis points. Its operating expenses are up 3.3%. CBA also reported that its loan impairment expense, which decreased to $554 million, and a final dividend was $2 per share, taking the full dividend to $3.50 per share, fully franked. Moving on now, DUG Technology Group shares are trading up so far this morning. That's after the announcement of its agreement with 𝐵XGEO, a marine geophysical services provider, for the provision of software on board their marine seismic vessel, 𝐊𝐴𝐺EO2. The company will provide its DUG Insight software for real-time data acquisition, quality control, and onboard data processing and visualization. Professional support services are also included. The contract is for an initial term of 36 months with an expected revenue of $900,000 over that period. DUG will also have the option to equip further vessels as 𝐵XGEO grows its fleet. Moving on, fund manager, the Centuria Capital Group shares are trading flat this morning. That's as the company shared its financial year 2021 results today for the period ending 30th of June. The company's operating revenues rose 40% from financial year 2020. Operating after tax rose to 32% from financial year 2020. It reported a strong balance sheet with $250 million cash in hand, and its net asset value increased to $1.92. That was from $1.52 from financial year 2020. Their operating profit attributable to property funds management is up 40% on the previous corresponding period. The company's operating recurring revenue rose 92% of the total revenue as compared to 86% in financial year 2020. A record $2.5 billion of real estate acquisitions were transacted during the period. Centuria Capital more than doubled its property platform to $16.5 billion, featuring a 30% expansion across New Zealand and a 125% rise in Australia in financial year 2021. Now it's time for a very short break, but stay tuned. I'll be back with more trending updates from the Australian markets.
Boarding pass, please. Hi, I'm Holly Shields, and I'll be your host for 𝐾𝐿 TV's news show, Travel Insights. Tune in to get the latest developments in the travel and tourism space, from updates on restrictions to travel guides to info about recreation and outdoor activities, or to get to the financials of the sector. Though the travel industry has taken a hit from the pandemic, there's still potential left for a revival on the back of economic upturn and COVID-safe travel measures. So if you want to know where the travel and tourism space is heading, dust off your passport, pack your bags, and watch Travel Insights every Thursday exclusively on 𝐾𝐿 TV. I'll see you there.
Hello, welcome back. This is Rachel, your host live from 𝐾𝐿 Studios, and you're watching the Stocks in Action show. The Insurance Australia Group shares are currently trading up today. That's after the company declared its financial results for financial year 2021. IGA's gross written premium grew 3.8%, mainly driven by rates. The company had an improved insurance margin of 13.5% in financial year 2021 compared to 10.1% in financial year 2020. It experienced growth and strong customer retention in new businesses. IAG recorded an insurance profit of $1.007 billion. That's up 36% from $741 million last year, mainly due to lower natural disaster costs, also positive credit spreads and lower motor claims in the first half for Australia. Notably, this year, the company reported a net loss of $427 million compared to financial year 2020. It had reported a $435 million profit. Now, the loss was mainly due to one-off corporate expenses associated with business interruption and payroll remediation. The company's cash earnings, excluding one-off items, increased for financial year 2021. IAG did announce a final dividend of 13 cents per share, making the payout ratio 66% of full-year cash earnings. And if we talk about its financial year 2021 outlook, IAG is forecasting low single-digit gross written premium growth with a reported insurance margin between 13.5% to 15.5%. The company said that it's aiming to grow customers in Australia and New Zealand's direct insurance businesses and expand its premium MRMA insurance brand across Australia in financial year 2022. So moving on to the last news now, we're covering 𝐊𝐴𝐿. Shares of the technology and hardware company were up after the company reported today that it has received a purchase order from its new integration partner, Polyair, worth over $300,000. The order is for 5,000 devices and is to be delivered by December this year. 𝐊𝐴𝐿 works to connect everyday electrical products to the internet to create smarter living and working spaces. Polyair is a wholesaler and manufacturer of quality equipment for heating, ventilation and air conditioning systems and fittings here in Australia. It has sales of over $100 million each year. The 𝐊𝐴𝐿 AirTouch integration expands are available across the ecosystem. The order represents an integral part of 𝐊𝐴𝐿's strategy. Polyair is the first distributor to take up product integrations, and 𝐊𝐴𝐿 expects further integration collaborations in the near future. Now, before wrapping up, let us quickly glimpse through developments across the equity and commodity markets. The S&P ASX 200 is currently up today, gaining 0.36%. Shares in Sims are up 5.77%, while Iress shares are up 4.25%. More sectors are lower than higher so far today, and despite the gain in the S&P ASX 200 index, materials is today's best performing sector, while information technology is the worst performing sector so far this morning. That's all from me for now. Stay tuned with 𝐊𝐿𝐴𝐿 TV for more live market updates. We'll be back with more news on the markets, the economy, diversity and sectors. I'm Rachel, signing off for now.